Are you ready to get started? All right, we're going to, let's see, the 1040 again. I want to review the 1040 for a minute because you're going to have a bunch of homework questions related to it. I just got to find it. Here we go, right here. Here are the parts. This is the back page of that 1040 I handed out, and I forgot to hand out all these other forms. So there's 3 different forms here. Take one and pass this down, and then the second form. Take one, pass that down. Do one at a time so they don't get mixed up. But take one, pass that down. Wait, I need one of those. Alright, so there's 3 more forms. But this form right here, page 2 of the 1040, here's the order. You need to make sure you're aware of this, so because you have questions in your future that says, what's the adjusted gross income? What's the taxable income? What's the itemized deductions? So you got to know how it all fits together. The first part at the top is the income part. After that are adjustments that mostly end up getting subtracted. Then deductions, which get subtracted. Then you calculate the tax. Then, if there's tax credits involved, it's subtracted from the tax. Then you decide, do you owe or do you have a refund based on how much you've already paid through withholding to your employer. Those are the steps right there, right? And you can see we're adding, subtracting this way. So here we go. I'm going to this. Where is it? Right here. If I said to you, where's my blanks? What is the adjusted gross income? Help me get started. We don't have to calculate, but how would I calculate? What would be the first number you would use following this process? What number? Not all at once. What is it? Okay, here. Gross income. Which is 62, just give me the number, 500. What's the next step to get to adjusted gross income? What would be next? Adding and subtracting what? Look at here's the order. Adjustments, add or subtract the 2,000. What usually happens with adjustments? Subtract it. 2,000. Next is deductions. Itemized deductions, we don't know the itemized deductions. Matter of fact, are deductions before or after adjusted gross income? Let's take a look. Let's go back to the form. Adjusted gross income is, where is it? Line 7. And line 7 is just before the standard or itemized deductions. So just this right here, these 2 numbers, equals AGI, adjusted gross income, which happens to be 60,500. Subtract that 2,000. There's that. Next. The next question will say, let me get this back up here. What is your taxable income? So to get to taxable income, what would be the next step? Add or subtract something from, we're at the adjusted gross income right now, 60,500. Now do we add or subtract what? What's next? Deductions. And we don't know our itemized deductions, so let's get them together. Itemized deductions. See anything up there that would be included in an itemized deduction? Medical insurance not covered by. On the itemized deduction page, you're supposed to compare your medical and dental expenses to a certain percent of your adjusted gross income. If this is on a quiz or on homework, I'm giving you the portion as if that calculation took place already, and this is the amount that is deductible. You don't have to do that calculation. So we have $3,000 right there as one of our itemized deductions. The standard deduction is like 12,000, so if we're itemizing, there's got to be more. Do you see another one? Say it again. I have the fan. I can barely hear. Donations. Okay, I'm going one at a time. Donations, 300. So there's that. Give me another one now. Mortgage interest. How much is that? That's a big one. 5,000. Anything else? No one else sees another itemized possible deduction? Property taxes. You see it? 3,000. Property taxes, look at your itemized deduction sheet, it's that Schedule A you got passed out. Donations, we did donations or not?
Oh, we did.
About 300, yeah, there's donations. So 1, 2, 3, 4, we got 4 items here, I think there's more. Say it. I heard, say it again. I thought I heard it. I see another one right there. State income tax.
Okay, yes.
State income tax, which is 2,000 more.
Now that you can deduct state from federal, but you can't deduct federal from state.
Correct. As crazy as that is. Let's see, we got donations, state income tax, property tax. Here, ignore this right here. I don't have it off there. And that's it, right? I guess that must be it. We got the mortgage interest. So let's add these up, see what we get. If this is, we're going to compare this to the standard deduction that's on your sheet for individual. 3, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13,300. Now, you have to make a decision. Should we apply the standard deduction to our adjusted gross income or this itemized deduction?
Itemized.
Why?
It's bigger than 12,000.
Whichever's more. The 12,000 is the standard deduction. These are 13,300. You want to be able to subtract the larger number. So we're subtracting 13,300. Let's see, where are we at? We did income adjustments, deductions. We're calculating our tax. Let me look at the tax form real quick, make sure there's nothing else coming off. Where is it? Oh, come on. What's going on? There we go. Can't move it. Let's see. Right there it says deduction, qualified business and taxable income. Subtract this, what do we get? I think I did this already, save us time. Where's my taxable income? 48,068. Right? Hypothetically, boy, this is a good chance for us to do to review our tax calculation. There's 4 people that weren't here to see the hardest part of this chapter. Go ahead. Did I miss something?
The interest earned in that itemized question?
What happened? We completely skipped that income stuff? Good call. Thank you. No, it's not, but thank you for bringing it up. Because we didn't add all the incomes up. All we put on there was the amount earned. Look at the other income. Which one did you just talk about?
The interest.
Interest. So we needed to add $556 more to this number. And there's another one up there. Dividend income. We got to add another 312 to this number. So now this number would be with those with it, then subtract the 2,000 would get you your adjusted gross income, which is 5, 6, 7, 8, 868 larger. That would be right here, 868 larger, 61, 368, I think. Then we subtract this, which makes this 868 larger. So 49, wait, is that right?
No, I think your number is right.
48, 868, 936. Help me out. Someone check that. Yep. 556 and 312 added to that number. That's our taxable income because we left it off here. Subtract 2,000 would make that the same amount bigger, which is right here. Right? Subtract the 13, blah, blah, blah. And that gets us here, taxable income. Let's use a tax table. I was going to say hypothetically, let's just multiply it by 20% to give an estimate so we can go to the next step to decide if we have a refund coming or not. I'll go with tax table here in a second. Hypothetically, this is not how you do tax. We're just going to multiply this by 20%. All right? Just to estimate what the tax might be. 48,936. This is not how you do tax. Don't take notes on this. You're just
down 4868. You had the right answer.
Darn. 48. The 48068.
So your calculations, you had incorporated all of those incomes
No.
originally.
Because you used your number from your work you already did.
Because I use what?
Because you looked at the work that you already had done for
Yeah.
that 48,068.
Yeah.
So that number's right. You didn't have to add 8.
No, these are not in that number. See this 556?
Yeah, but you already did the work and wrote it down, and you wrote down your answer instead of going with what the class is going.
Oh! There's what I need to hear. Everybody hear that? Because I wrote down my answer instead of doing the math, and this already has these incomes in it. Thank you. All right. Thank you. Now I get it. Okay, here we go. 48,068 times. There we go. Let's say the tax is $9,613 or $14. There's the tax. Hang on, let me get rid of this real quick. Let me get rid of that. And let me go back to, now look at the sheet. My question for you is, would this person be getting a refund or need to send a check in? Say, Brian.
They need to know how much they withheld,
What'd you say?
how much they withheld.
Refund.
Refund. They owe $9,614. They already had withheld out of every paycheck $10,000 for the year, so they have a small refund coming of $300 and some dollars. This is exactly like what you have coming in your future. So I hope did I post this? If I didn't, do you want this posted right here? Because you got notes on this. Is that what's going on? So I'll make sure and post this. But I posted a bunch of stuff. All right, we got that reviewed. Now, we should review the text. If we have time, we'll review that text table. I want to talk about let's go to slide 15 if you got the PowerPoint. Here's what a kind of a simple W-2 looks like. Is there anybody here who's never gotten a W-2 before? You've never gotten one? You've never gotten one? That's it, just 2 weeks. So everyone else has seen one? I want to show you this one. Because this one has, today, most of them have these 2 boxes right here. One's called, boy, it's really blurry there, Social Security wages and Medicare wages, and then the box number 1 at the top says wages, I can't read it, wages for tax clarification or something like that. Notice that all 3 of those, 16,500, are the same. And that's common until you go to work for a major employer who has a retirement program. Any money, like to take the matching retirement program, any money coming out of your check will be reflected in box 1 because you don't have to pay taxes on it in the year it came out of your check. It's going into a tax-deferred account. So box 2 and 3, your Social Security income, will be higher than the one you report on your taxes, which is box 1. It's almost always the lower number is the one you're reporting when you have different incomes on that W-2, because that's the one you got to pay taxes on, and not the larger one, because the difference is what was put into a retirement. So I want to make that aware, make sure that we're aware, because if some people quickly put the larger number down, and so they're going to pay taxes on the money they put in retirement, and then pay taxes on the money they put in retirement again when they take the money out. And nobody should be paying taxes twice on the same money. That's crazy. So it's the smaller number of when you have those boxes, like box 1, 2, and is it 1, 2, and 3? That's 1, 3, and 5. Boxes 1, 3, and 5. So for the 2 you've never had a W-2, that's what it looks like. We're going to slide 13. Okay. This has been traditionally on either the quiz or final every single semester this class has been taught. So I want to make sure you get this. The difference between a tax credit and a tax deduction. The difference is, if you look at the math on this, we subtracted deductions from the income before we calculated how much tax we're going to be paying. So what's happening is, if you have a, how much was this deduction? $13,300. What's happening is, you didn't get $13,300 off your taxes. It's whatever tax bracket you're in, your income got lowered by $13,300, so you didn't have to pay taxes on that money. So if you're in the 22% tax bracket, the amount you save by having this deduction is 22% of that. Tax credit. Look at this process. Income, adjustments, deductions, tax calculation. After you calculate your taxes, you have tax credit, which is on form, I don't remember the form number. It is form 3. Look for form 3. Did I print 3? I had to. There it is, this small one here. Those items that you see listed there, foreign tax credit, credit for child and dependent care expenses. Remember me talking about where, we're at a time where the the baby boomers are turning into very elderly ages and living longer than historically. And so you might have to take care of them. You're going to get a tax credit for whatever it cost you to take care of somebody that would be considered dependent, like an elderly person, if they're living with you or whatever. The rule is if you're providing more than 50% of whatever it costs for them to live, a roof over their house, food, transportation, then you can write it off as a dependent, and those expenses you incur are written off also. That includes, they're taking a room up in your house, you know, a bedroom, you're going to get a tax break on it. There's a calculation involved though. I want to also point out another one, education credits. Right there, and where's the other one? Residential energy credit, that won't be there much longer by the time you guys start making the most money you've ever made in your whole life. That will probably be gone. But if right now you were to go get a new furnace and it's very efficient, there's certain rules, and a new air conditioner, it has to be very efficient. And if it meets those rules, you get money back by showing how much you paid for it. There's a calculation involved on form 5695. What's nice is, in Flint at least, because I own some rentals and I worked with a lot of different heating and cooling companies, they have the forms, they help you fill it out because they want you to get the credit, because that's part of their sales pitch. You buy the furnace from us, you buy the air conditioner from us, we're going to help you get the credit. And we know exactly the rules. You have to buy one that's a 15 SEER. If I never heard that, but that's how air conditioner units are ranked by, and I think it's SEER, their SEER rating. And it has to be efficient, so it has to have like a 15 or higher or something like that. There's all these little rules. The furnace, they have these efficiency stamps, 80%, 85%, 90%. Well, if it's 90% or higher or something like that, you're going to get a tax credit and some of the money back. These items are slightly more expensive, but if you take the tax credit into consideration, you'll see that you're paying almost the same for one that's not efficient. So you might as well go ahead and buy the efficient one. Spend the extra money, you get it back when you do your taxes. Anyway, tax credits, after we calculate this tax, gets subtracted directly from the tax you owe. So if you have a $2,000 tax credit, you're lowering your taxes by the full $2,000. Where the tax deduction, you're only lowering it by whatever tax rate you're in times the deduction. You're just subtracting from the income, not the taxes directly. So if you had a $2,000 tax deduction and a $2,000 tax credit, and I asked you which one's going to lower your taxes more, I hope you realize that that the tax credit will take $2,000 off your taxes, where the tax deduction only takes maybe 22% of the $2,000 off your taxes. A lot bigger, that's like $440 as well, where this one's a full $2,000. That's the difference between these deductions and adjustments and a tax credit. I put the word adjustment there also because your IRA deductions are in the adjustments, even though that's a deduction, treated just like deductions. They're subtracted from income.
Would you normally separate the dividend income?
Separate it. I'm not going to go into ordinary dividends compared to, is that what you're saying?
Yeah, so see, because there's different tax.
Because when you get your tax forms, if you own investments that pay dividends, qualified dividends and ordinary dividends, they break it up for you. You don't have to, you just follow the instructions and go, okay, here's my qualified dividends, you enter that. Here's my ordinary dividends, you enter that. And every one of these free web pages of software will calculate which one's how much of it is taxable for you. So it's just a matter of, you just follow which line item to use off your investment forms. They're called 1099s INT, 1099s DID for dividend, and they're kind of like W-2s, but they're pretty specific. You just follow the instruction, line item 2 goes here when you have investments, like doing your own taxes. Speaking of Seth, he sent us this great form here, and I posted it. He found this. Remember when we were calculating tax, you weren't here, but when we were calculating tax, I was showing you how you had to subtract the big number from the small number and then multiply it. Well, they're doing it for you on this. I posted this. So if, let's say someone has, what was the income here? 48,000 taxable income. They would land in that third one down. You don't have to calculate the first one and the second one. You go straight to the third one down, and there's the first two brackets above it, $4,543 added together. And then it's only the amount in this bracket, 48,068 minus 39,476, just that portion then. Just that portion you would multiply times the 22% and then add it to the 4,543. makes it a little easier. Here's the deal though, you for sure are gonna have this on your next quiz. And if you're using this, you're not gonna have all the work. So you gotta make sure you're showing, you know, I don't know, something that shows that you are using a number off this table instead of calculating those first two numbers. Everybody understand what I meant by that? You know, you didn't take 9,700 and multiply it times 10% and get a number. You didn't take 39,475 minus 9,704 and multiply it by 12% and add it to 970. You're not showing that if you're using this table. So something's got to be done to show me that you're using this, because you're going to have a lot of work missing on your answer. So do whatever it is you're imagining right now that will tell me you're using this table. All right, whatever it may be. Start copying down 4,543 from, I don't know what from, whatever you want to call it, tax table posted by Seth. And then you're going to find the difference. Let's say this taxable income came out to 85,000. Look what you'd have to do. 85,000 lands right there. So you would have to go, the other three brackets before it, the tax was 14,382 and 50 cents. That's adding that 970 plus the, you know, each one of them up to that point. Then 24% times just the amount that's above the minimum. So if this is 85,000, it's just 85,000 minus 84,201. That's the only part that's going to be multiplied by 24%. The rest of it was multiplied by 12%, 22%, 12%, and 10%. So no matter, again, for the people that weren't here, no matter how much someone makes, we all get taxed the same on the first, on the beginning money. Everybody, no matter what they make, gets charged 10% on that first 9,700 if you're single. Everybody gets 12% on the next batch of money. Everybody gets charged 22%. If you made $1 million, you're still paying the exact same rates as somebody who only made $30,000. You know, you just go each step on the additional money above that bracket. And I'm trying, the reason I'm really pointing this out, there's still a big myth out there that if all of a sudden you're going to make 40,000, so many people think, oh, I'm going to be in another tax bracket. They think the whole 40,000 now is going to be taxed at 22%. When no, we're all taxed the same, the 10%, 12%, and only the part that's over the minimum is taxed at 22%, not the whole thing. So there's no reason to go freak out if you're going into another tax bracket. Only a small amount is going to be taxed at that higher amount. All right, let's point that up. Capital gain tax rates. Here we go. This is a big deal, if I can find it. Here we go. Here's those brackets again. Here's your tax rate. But you went ahead and cashed in a mutual fund that is not in your retirement. You did some investing because you have your emergency fund. You did some investing in some mutual funds. Maybe even the same investments you have in retirement, but it's a separate account because it's with your own savings, already been taxed. And you went ahead and cashed it in. Whenever you cash an investment, any money made on it, the year you cash it in, you got to report the gain. Even if you held it for 10 years, all that gain for 10 years got reported in the year you cashed it in. Any part of it you cashed in. So the deal is, though, if you owned it for at least a year or more, let's just go with over a year, because I can't remember exactly what it is. But if you owned it for over a year, you're not going to pay the same tax you would like you do with your income from work. You get a lower tax on the part of your income that was a capital gain from an investment you held over a year. So here's the deal. Here's how you do it. Let's say you've made $40,000. Does everybody see, what's it called when we're looking at what the tax rate would be on the next dollar? It's December, you made $40,000, you're about to make $40,001. What's that called when we're looking for the tax rate on that one more dollar? Marginal tax rate. Look at the marginal tax rate for 40,000. If you see it, it's 22%, correct?
Yes.
But part of that income was a capital gain. I don't want you to get into controversy. Oh, does that put me in a different tax bracket? Let's call it 50,000. 50,000, you're in the 22% single filer. Part of it was a capital gain from an investment you held for a couple of years. So when you go in this program and you're doing your taxes, you say, Do you have investment income? Is it a capital gain? And it will say, do you have Form 1099, whatever it's reported on. Is there anything on line 3? Yes. Oh, capital gain. Give the date you bought, date you sold. It will know it's longer than a year, and it will take that portion and not tax it at 22%. You match it up here, okay, 50,000 would land between these two. That income from that investment is only taxed at 15% instead of full 22. Let's keep going, because the more you make, the bigger the benefit, which, you gotta remember, there's a separation of wealthy and not so wealthy taking place in our country. The separation of the classes is not going to turn out well. You already see bad things happening. And so it just keeps getting worse because the tax laws keep getting changed, and people on the not so rich end don't even see how bad this is hurting and how much it benefits those who are already making a ton of money. Because the more you make, the bigger the benefit. For example, let's say you made $400,000, and some of it is a capital gain from an investment. You don't have to pay 35% on it. You still land between these two numbers. You went from 35% to 15%. Those who are making like $400,000 are getting a, what was that? What did I say, 35 to 50? That's a 20% more of it in their pocket. Where the average person who's only making, between 38 and 82,000, they also pay 15%, but they would have only had to pay 22 because they don't make nearly as much money as people are making a ton of money. So the break for them is only 7% more in their pocket, not 20%. I want to go another tax bracket. Hang on a minute. How much is this one? Right here. Now it's 17. So the biggest break is from this bracket to this bracket. 20% more. That's the biggest difference from having to pay a regular tax. Now, look at it from the standpoint as an individual who, I got to pay 35% on this money I just made. Wait a minute. I made it from an investment I held longer a year. That portion, you only have to pay 15%, and you're putting 20% more in your pocket where you thought you'd have to pay taxes on it. That's the advantage of holding an investment. This little thing I just told you is something you've got to remember, because there's going to be a time, and it happens to everybody, where they lose their jobs and they're saying, I don't want to run out of money, unemployment's not covering everything, and they start to dip into their retirement or maybe their investments that they really never wanted to touch until they're ready to retire. This is a very common thing. In 2009, after the crash, it was the largest amount of people that ever had to dip into their retirements because they ran out of money. Because people are getting laid off so fast, about $500,000 a month for months at a time. And where was I going with this? Anybody? What was I talking about?
Capital gain.
Say it again?
Capital gain tax.
Oh yeah, that this benefit, this tax change that took place, is to save 20% instead of saving. We're only going to save 7%. Right? Because you make less money, you only get to save 7% from your investment. But if you're making a ton of money, you get to save 20% on your investment. And it really should be the opposite. There's a need and want, and those who need more should have more of a tax benefit, and those who want more but don't need it should have a tax benefit too, but not as 3 times the tax benefit from the average person. I hope someday someone starts recognizing all these things that are taking place that's just causing more of a separation of classes. The rich are even getting richer, and the poor, and the middle class is getting poorer, even though we're middle class, we're all middle class, but middle class isn't going to be the same. Once inflation takes place, there's going to be a lot of things the average person isn't going to be able to buy anymore. All right. Next, you got capital gains figured out. Records. I don't have a slide for it. But all those tax records, the W-2s and all those things you get when you do your taxes, do you guys hang on to them currently? Do you put them in something? I do the whole shoebox thing like usual. Shoebox, I'm like, I take that back. I forgot. I don't put the taxes in there. I have folders with the taxes. Now, some people say, you don't have to save them for that long anymore. You only have to save them for 3 or 4 years. I say save them for 7 years. It's always been 7 years. It's been 7 years as far back as I can remember. And just to be safe, hang on to your tax information, your W-2s, anything that you use to do your taxes for 7 years, just to be safe. Now, I'm a hoarder, So I got probably 8, 9, 10, 11, 12, 13, 14, 15 years of tax stuff down my basement. And even when I got flooded and the sub pump went out, it didn't make it to the tax stuff. I don't know why. But I'm ready to pull stuff out. All right? How are we doing on time? Doing okay? All right, we're going to review the tax calculation. We'll just keep this one up there, right here. This time, head of household. This is a single parent who has somebody they're providing a roof over their head, is a dependent, whether it's an elderly person or a child. In most cases, head of household is a child you're providing, you're providing for or taking care of, is your child or whatever, but you're not married. And you're the only income for the household for that child to rely on. That's called head of household, so we're going to that bracket. And this head of household person works, and you know what? Has to pay so much in daycare, this person's going to have a $2,000 tax credit from all that daycare you got to pay. Get some of that money back. That's a problem for single parents. And the head of household person had a good year, $50,000. I don't even know where I'm looking at. $50,000 in taxable. No, that's gross. Here's taxable. Gross income, taxable income. $45,000 taxable income. Let's calculate the tax. Let's use Seth. Well, let's do it without Seth one time, just because there's people here that didn't see how it's done. Go to the right column. Look at the first row. Head of household has to pay 10% on the first $13,600. So 13,600 times 10% is $1,360. There's that one. Next column. Is the next column where our taxable income lands? 45? It is? So we got to go to the next column, and don't do that full amount from 51 to 13.6, because this person didn't have taxable income to 51. Just the amount that's up to the taxable income. So 45,000 minus what is that amount? 13,006, which we already paid taxes on here. 13,006 gets us to some amount, and that amount is multiplied times 12%, 0.12. Then that amount plus this 1,360 is the total tax. Now I'm jumping to Seth to save us time. Where is it? Right here. Look for head of household. What's the deal?
Scroll down.
Okay, just checking.
Keep going.
Head of household. We can jump here. There's the 1,385. 1,385. Hey, is this 2018?
2019.
We got 19.
Yeah.
His is 19. Be careful. By the way, your homework is an old tax bracket, so don't rely on this at all. And you know what I just realized? Your quiz is not going to be 2019. He's going to get 2018s because he feels really bad about this right now. And he's going to email it to me, and I'm going to post it and replace this one with the. I'll leave this one. I'll replace this one because there's no way we're going to use 2019 numbers for the thing. But if this were 2018, you would just take that 1,385, which is really 1,360, and then you would add it to 12% of that amount that's calculated right here when we subtracted the two. So it already calculates this for you. But if we went 3 brackets, it would be that 1,385 plus the full tax on that amount between 84 would be 6,000, and then just that little bit over 52,000 would be taxed at 22%, added to the 6,000 if this were 18s. If this were 18. So now I realize, use whatever tax bracket your quiz, your homework, or final exam tells you to use. If it says 18 or 19, which I don't know if it will, maybe 18, and that way we'll say 19. That'll be the only way to use this little shortcut, unless you guys can find one for 2015, 16, 17, 18. Because you don't know which numbers are coming at you, but it will say on the quiz. I don't want to use the same numbers every time, the same brackets. Do we feel like we can calculate this? Because this is kind of like the hardest part of the chapter a little bit. We can figure out what the adjusted gross income is. We can figure out if itemized deductions are more than the standard. We can figure out what taxable income is, and we can calculate the tax. By the way, we got one last step on this. Whatever that tax amount is, which was this plus this, 1,360, plus whatever this came out to, because this person had a tax credit from having a child they had to take to daycare all year, whatever that comes out to, that gets subtracted directly from the tax. It lowers the tax by that the amount of that tax credit in full. It's a big deal. A tax credit is a big deal. It gets directly lowered off your taxes, and it increases your refund significantly. That's it. We're going in class assignment. Are you ready? Anybody have questions about taxes at all? What was the advice I gave you after you do your own taxes to do what with them before you mail them in?
Go to professional.
Go to a professional. They offer free looks at it. They'll go through it and look at it and see if you made a mistake. And they'll try to talk to you into letting them fix your mistake. All right. In-class assignment. Won't take long. Do not work alone. Work together. Do not get it done and then help the other person. Start it. Help the other person. Do work more. Help the other person. Check with 2 other groups before you leave in other parts of the room.